So happy Saturday, everyone. Here I am with this is Craig Dixon and with Alden Rado, and we're going to talk about investments, very a range of investment strategies, including mortgage notes. And this was a topic that you wanted to talk about, Alden. So maybe you can kick that off.
Yeah, absolutely. I think a lot of capital investors are looking to ultimately diversify their portfolio right now. There's a lot of uncertainty in the stock market. There's a lot of pressurized real estate pricing, and cash flow is a scarce thing to have accommodated. So, with the high volatility in the stock market and the different buckets of investment strategies for capital investors, it's tough to know where to go. Stocks have their tried and true processes. They've always been an investment vehicle for individuals and as well as residential real estate. But when talking about a seasoned investor or someone who's accredited with, a couple million in their portfolio, it's encouraged to ultimately diversify. Well, what does that look like? Right, in the market of where it's currently at? You probably have a financial advisor who's advising you about how to execute in the market. Well, you don't want to put all your eggs in one basket. And I know a lot of people aren't doing that, but to ultimately continue to additionally diversify in quote unquote alternative assets like seller carry finance notes, you have raw materials, so gold and silver and things of that nature. It's as an investor, it's tough to know where to go when you're ultimately wanting either appreciation on your investment, cash flow, or long-term buy and hold of values increasing on like gold and silver. And then you have your stocks, bonds, and mutual funds that your general financial advisor is going to help procure. But right now in the financial market, September last month was historically a really bad month for stocks. And as over the past week, interest rates went down and have come back up. So there's a lot of uncertainty out in the market. You hear a lot of potential opportunity in the commercial investment strategy, but that hasn't so much peeked its head out as there's not enough hurt out in the market. So it's tough to know where to go. So as president of Silvercrest Opportunity Fund, we think that we provide additional hedge out in the market, and one of the best strategies for busy business professionals that ultimately want to continue to diversify their portfolio, call it at a 10 or 20% of their overall holdings. What's the rule of thumb? The rule of thumb is to diversify 10% of your portfolio into alternative assets, and that's typically done outside of a financial advisor or done through a fund, right? So it's tough to find vetted operators in the nation and have a know, like, and trust feel to ultimately earn a secure return out in the market. I talk to a lot of individuals that are conventional real estate investment strategies operating in those categories of long-term buy and hold and rental. Well, here in Arizona, it's a scarce thing to come by. You have high inflated pricing, you have low inventory. There's a lot of build to rent as far as institutions entering into the market, but not a lot of build to sell. So that's ultimately keeping inventory at a median availability. We've seen some increase in residential property, but it's still a far cry from what a normal market is. And housing's extremely there's a lot of people moving here to the valley here in Arizona, leaving scarce opportunities, scarce availability for cash flow, and the want for appreciation on your return on investment. And with that being said, it's tough to know ultimately, where to go with your dollars to make it a savvy investment strategy. We just saw the biggest boost in appreciation in recent history over the past 2-3 years. Is that going to tick up that much more? It's could go either way with rates fluctuating. We are in an election year. There's a lot going on out in the market. and people are looking for a safe, secure return. Capital investors that are high net worth, their main concern is capital preservation. It's not so much trying to make the most profit on every single investment strategy. And that's why it's encouraged to diversify, right? They take some stocks, they take some bonds, they take some mutual funds, they have some residential single family properties that they rent out for long term. There's that 10% where they can ultimately take a more escalated, mitigated risk within a strategy to earn a higher return. And I'm seeing that currently with a lot of clients that we're talking to, of people wanting to diversify and not really knowing where to go. Well, the golden nugget of seller finance notes provides individuals the security, so they have a lien on that property and they earn a higher than average return than traditional real estate investment strategies in an alternative investment. Well, what is that? So that's Silvercrest Opportunity Fund and Win Mobile Homes and Mobile Mailbox Money. Here in Arizona, we operate as one of the top licensed manufactured home dealers, buying, rehabbing, reselling manufactured housing. What an interesting concept, right? There's not all that many people out there executing in this market. They may be scared of the non-conventional strategy when they could do a fix and flip on a residential property. Where's the move? Well, it's manufactured housing, and unbeknownst to a lot of people, Warren Buffett, a lot of people follow Warren Buffett. They follow when he goes to cash, they follow the stocks that he trades. Well, he just recently went to cash some crazy number, a couple billion, over the past 2 months. And it's important to see what he didn't sell. What did he not sell? His interests in Clayton, Cavco, and 21st Mortgage. I bring that up because Clayton and Cavco are the two largest manufacturers of mobile homes and manufactured housing in the nation. And I heard a statistic the other day of nationwide, I think it's 1 in 5 people actually live and facilitate primary ownership and primary residence in manufactured housing. On top of that, 21st Mortgage did 90% of the manufactured home loans in the country last year. Why do I bring that up? Because that's an institutional strategy that they're not shying away from, and they have their market analysts for the longevity of the business of manufactured housing. He's not only manufacturing them and selling for cash, right, which is a great flip or manufacturing strategy, but also taking the long-term hedge with this other entity of 21st Mortgage over 20, 25 years in secured notes on personal property mobile homes, which to me seems like the golden nugget opportunity out in the available financial market. And it's backed by an institutional investment strategy known to none other than Warren Buffett. When you're talking about available opportunities out in the market, for one, it's hard to find deal flow and investments that make sense financially long term. And the market is in a frenzy right now trying to figure out, okay, where do we place our dollars? So in a note strategy backed by manufactured housing, hedging the market with affordable home ownership programs like Warren Buffett provides a capital investor the security, safety, as well as a higher than average return, hedging the market in the affordable housing crisis. This is solving the issue for affordable housing, and affordable housing is one of the biggest trigger words that politicians are bringing up right now. It's being brought more to the forefront than ever because there's a problem, people. There's a problem with affordable housing. It's not so much people not earning, the necessary income. It's more of the affordability. Things have gotten so unaffordable as far as, even food and regular gas, and the regular consumers really feeling that right now. And to go out in the market and see inflated residential real estate pricing, as well as high rental rates, depending on which market. In our local market of Arizona, there's not a lot of whole avenues for individuals to facilitate affordable housing. Well, what's that option and what's the solution? It's manufactured housing. Manufactured housing is a new frontier and a new election of a desirable ownership program, where historically, it was your trailer park boys, your grandmother's mobile home. That's not the case anymore. And with the new institutional appetite in these communities, they're raising the quality, ultimately raising the institutional grade of that investment strategy, especially here in Arizona. It's becoming more palatable for capital investors, palatable for the end consumer. We're now at a new frontier of the asset grade, the investment grade of this strategy. And it's being done under the guise where not all that many people understand manufactured housing, nor are they aware of what's going on. You hear BlackRock, Vanguard, and State Street, they want to own 30% of single family properties by 2030. And they may already have done that, for all we know, with their subsidiary entities. What a competitive asset class. You talk to people about what they do, and if they do residential real estate, everyone and their mother says they do real estate. Well, what a fantastic strategy to alter on a small pivot into a real estate-esque environment, into housing that isn't so highly competitive. You talk to 100 investors, and the individuals saying that they're in manufactured housing is next to none. There's very few, and some of them have been on this podcast here, Greg, with us. So you kind of draw out the niches here in the nation. So that's great to see. And that there's other people operating in these strategies. They're savvy investors that are hedging their bets in manufactured housing. Well, why even do that when someone may be a stock investor, a mutual fund or bonds holder, or they're doing long-term single family, conventional real estate investment strategies? Well, the saying goes, diversify 10% of your portfolio. It's important to do so. You can only be so diversified if you're taking one broker's products that they're bringing to the table. As an investor, you need to diversify outside of the primary modus operandi, because at any given time, people are manipulating the market. If you're sitting back and thinking that BlackRock, Vanguard, and State Street don't manipulate stock trades and what's going on, in the nation with residential property, as well as inflating multifamily rental rates, you're missing out. You're missing out on hedging yourself against market swings and market volatility. I'm not a market analyst by any means, but I understand there's market sways and market fluctuations. Well, where's the market fluctuating? To affordable housing. And while people are maybe a busy business professional, a doctor, a lawyer, a dentist, that's really looking for a smart capital preservation, but also a return on investment, there's really not all that many avenues. And when they're talking to their FA, their financial advisor, they're being chefed some relatively conservative approaches, which is respectable, because as a financial advisor, capital preservation is the biggest key for high net worth investors. So what better way in the golden nugget of seller finance to hedge your capital investments in a secured asset, possibly in a fund like Silvercrest Opportunity Fund, or buying a note that is cash flowing, qualified, and consummated in the affordable housing crisis, ultimately helping solve that issue. Well, affordable housing is going nowhere. There's no end in sight. Why is there no end in sight? And why will affordable housing and manufactured homes stand the test of time? Well, because of material pricing and labor. By the time you go and try and build a single family property and make a savvy build to sell strategy, your pricing is already outside the realm of affordable housing. Additionally, here in the Valley of Arizona, there's a lot of people that have done Airbnbs ever since the Super Bowl. A lot of people had that inclination to jump into Airbnbs because they saw it's a sexy strategy, right? Especially here in Arizona. And ever since the Super Bowl, the market's been hyper saturated. There's all kinds of people that are jumping on the bandwagon of Airbnb and losing money monthly in cash flow, losing money to management fees, maintenance, insurance. And by the time you hit your 3 to 5% appreciation that you're trying to target nationwide average, what does that look like as an annualized return? Yes, it's a sexy strategy. Yes, you can, say you're a landlord and you own multiple properties, but really take that on the chin and for really what it is as a long-term annualized return, there may be better available opportunities. And as me sitting here today, president of Silvercrest Opportunity Fund, I would never tell anyone to sell their whole portfolio and say to go into notes or go into a fund. That's why the definition of diversification holds so heavy with capital investors. You never want to put all your eggs in one basket. That's ill-advised. Whether it's in stocks, in bonds, in mutual funds, you need to hedge outside the stock market because we see these whales. These whales are manipulating the market and we're behind the 8 ball at the end of the day. Are we going to get that insider information of what's going on? It's a tough thing to accommodate as far as a return on investment, and be savvy and know where to go. To even find deal flow right now is a challenge. There's not all that many people actually creating opportunity here nationwide, but also, the investment grade of those opportunities and the return on investment, really what is that? So as president of Silvercrest Opportunity Fund, we hold a portfolio of notes that we are offering to accredited investors to earn a 10% return backed by the notes that the manufactured homes that we bought, rehabbed, resold, consummated a note. That note got third-party underwriting. They fit a specific criteria under Dodd-Frank compliance. So a 600 plus credit score, no past criminal, no open bankruptcies, no past evictions, and verifiable income. Why do I bring that up? Because the note is in the power of the borrower's ability to repay as well as the security. So as there's a secured lien on the property, the borrower fits an ability to repay. That investment grade of that note now is elevated. Additionally, on top of the third-party underwriting, these notes are stamped off by a licensed mortgage officer. So not only are they qualified, consummated, and cash flowing, now they are a bank quality note. Why do I say that? Because banks are now purchasing these types of notes. Well, as an investor, I may not feel that that is a solid strategy. What's the security? How stable is manufactured housing? If Warren Buffett and banks are actually buying these notes for the secure capital preservation and return received within this strategy, if you're not going to take my word for it, take it from the institutions that are actually buying these notes and paying face value. What is that? Face value. Why are they paying face value? Well, it's a highly non-competitive environment as well as it's affordable housing crisis, people. This is the solution to so many politicians' quips and what they're running on. There may be some changes in manufactured housing here in the next year or two with potential more institutional funding, but that's still going to leave people outside of the concrete requirements of those lending criteria. So for us, on being boots on the ground, we started off as a licensed dealer of manufactured housing, buying, rehabbing, reselling for cash. And we could only get so far as that, operating as a cash sale at the end of the day. So what did we do? We saw the opportunity in the market to start initiating seller carry finance notes, and our business went hyperbolic. So we're doing about 3 to 5 transactions a month, originating seller carry finance notes, and those face rates on those notes could be like 14%. So we've done the same rate for the past 7 years. Even when residential rates were at 3-4%, we were charging the same rate. It's important to understand the dynamics of why this is an opportunity, as well as the deal flow. People, you may have a liquidity moment. You may have you may not have the liquid capital right now, but what better way to understand that there is an available opportunity and deal flow of private notes that fit a specific criteria and are in a top 10 market operating in an institutional investment strategy. When you get liquid, you're kind of trying to find what's the next move, right? And every month that you have that capital in your account, you're losing to inflation. So you're kind of hot to trot sometimes and may not be able to initially vet that opportunity as hard as you would have liked or whatever. It's important to know that there's deal flow here. There's deal flow, and there's more than enough business here in Arizona to do even like 3 times the amount of transactions that we're doing. And we have the licensing, we're licensed, bonded, insured, and are available and are looking at growing here in our local market to 2, 3, 4x, and ultimately providing these available opportunities to capital investors that want deal flow. You can go buy 1 or 2 residential notes. What is that acquisition? That acquisition could be 150,000, or maybe you buy a partial, or whatever it may be. But to ultimately have a delta of a reduced acquisition fee in comparison to like a conventional real estate investment strategy, by the time you go into a metropolitan market, not so much an off market, you're 20% down for the DSCR loan could hit about 100,000. By the time you buy a turnkey property, you're into it for about 100. Well, what's your NOI? What's your average targeted appreciation on that for your 100, right? So at 100,000, you could say invest the minimum investment for Silvercrest is 50,000, but you can diversify now into a passive strategy. So opposed to having the 100,000 out of pocket, you're targeting a 3 to 5% net operating income average nationally, 3 to 5% average appreciation. We just saw big appreciation. Is that going to hit again? It could. But to know that you can earn a 10% return with a $50,000 minimum backed by manufactured housing, opposed to the alternatives out in the market, that's a real big key factor that not a lot of people are aware. So I'm here today with Greg Dixon on the Note Show to let people know that this is an available opportunity. We're going to close out our first $1 million here in the next 60 days of a portfolio of notes, those same notes that we've bought, rehabbed, and resold. And individuals that are seeing volatility in the stock market and vetting residential opportunities out in the market people are looking heavily right now to turn a profit, but also have their capital preservation safe, a safe, secure return with a vetted operator or in a vetted strategy. They may be tapping their FA, hey, I want to move 100 or whatever it may be, 500,000. They're looking for opportunities. And I don't know, Greg, if you're seeing the same thing of the people that you're talking to, there's a lot going on. And I see Dr. Ivan here joining on in. Glad to have him in the Note Doctor on the show today. But investors are looking for alternatives. And I think that the golden nugget of seller finance notes and the available opportunity for a 10% return for a 1-year term for our 506c 3c1 accredited investment fund, that I think fits a lot of boxes for individuals that are looking for the diversification, the need for diversification. I'm not saying to liquidate your portfolio of stock bonds and mutual funds, not by any means. That would be an ill-advised position, but you need to diversify your portfolio, and we would love to help you do that, ultimately helping you in a 1-year term at a 10% rate. That way, in a year from now, if you guys want to go liquid, that's up to you. But I think that the available opportunity, the passive yield received within the fund, passive, people, this is not taxes, insurance, maintenance, management fees. You're earning a net 10% for a 1-year term. And we can talk again in a year from now, ultimately congratulating you on your monthly return received, but also, provide you the availability of, if you see opportunity out in the market, you're available to go liquid and maybe buy that single family property. But while people are sitting there thinking and trying to find opportunities, 6 months goes by and you just lost, 5 to 10% to inflation.
Well, that's fabulous. What I love about this is that the manufactured homes are meeting the need for affordable housing. That, like, all across North America, there's a huge shortage.
Big
And
time.
yeah, my joke in Vancouver, British Columbia, is $500,000 will buy you a really nice chicken coop. Yeah,
Right.
yeah,
$500,000.
yeah, $500,000. So you can't you can barely buy a condo in Vancouver for less than $1 million, and detached houses are 2 and up, right? And sometimes you can buy a $3 million teardown. So,
Right.
yeah,
Man, what a polar opposite situation we are in from the American dream.
yeah,
The
yeah,
American dream, it was to own a property and have a family, and the regular income does not support that anymore. Now that the institutions are hyperinflating residential prices across the nation and even in Canada, it's interesting to see, average purchase price of a single family property here in Arizona is $450,000. The income of average individuals here in the valley is about 60,000. Well, just to qualify, say for a $300,000 mortgage, you have to make $70,000 to $80,000 a year with no debt, zero debt. So
yeah.
you have to account for your debt to income ratio, right? Ultimately, when someone's qualifying, well, where's the give? Where's the affordability for a hardworking blue collar American, or a manager at a stable job? Where's the give? Are they just to go rent for the rest of their life? Like, how much of a travesty is that, and polar opposite from the American dream? And it may not ever fix this, may not ever go back to the situation where people can afford to buy a single family property. That it may not ever happen again.
No, it may not. It's tough. One of the things I love about Win Mobile and the mobile home thing is, um, mobile home and manufactured homes is all sorts of, you can help on all sorts of levels. Like people, just families wanting to get in a home, it becomes more affordable. And also we have uh homeless crisis, I think, in many places in North America. And there are many government agencies and various organizations, and like many small homes, those mini homes,
Yeah, sure.
manufactured homes. Those can be a real solution for that kind of thing. Like here in our town, they're sort of pushing people into hotels, which isn't ideal. So,
No, for sure. There's no, that's not a home. A hotel's not a home. An
no,
apartment's not a home.
yeah,
If people are looking for homes, and on the other side of the end consumer, there's the investment, right?
yeah,
We're all here to make money. Let's be honest.
yes,
We're here to turn a profit. But what better emotional satisfaction it is helping people in a time when it's needed most to ultimately earn a higher than average return and also have a give back in the situation, opposed to doing a landlord and tenant strategy. There's relatively not a lot of satisfaction emotionally, in a program like that. It is tried and true and it is a sexy strategy. But when you're talking about someone saying I'm a landlord to, hey, I create owners, that's an entirely different conversation. And I feel it every day, the emotional satisfaction of creating homeowners and earning a higher than average return. These people are crying at closing. They've been left out of home ownership sometime for their entire lives. We do family communities as well as 55 and older. Well, who are the people that are hit the most by this financial market? It's new families and people that are trying to retire affordably. Well, what better way to hold these people up and earn a smashing return while also no one's getting stepped on? There's a buy, a sale, and an investment. From the buy, someone may have, been moving to assisted living. It may be a hoarder house and there may be a problem. We buy that property, we recash flow it. The institution that owns that park thinks of us as the knight in shining armor because we took a blight asset, rehab that property, and ultimately increased values in that area. But also we created an owner. We qualified that owner. That owner got now pride of ownership. And additionally, there's no prepayment penalties or anything. We do charge a little bit higher of a rate, but at any time we encourage them to refinance, or if they need to pay off or they get extra payments, on a tax return or whatever it may be, we encourage individuals to ultimately get into the best available opportunity that we have available. From the buy, the sale, the investment, man, it's the golden nugget of finance. And it's a new election here.
Yeah.
9 times out of 10, you talk to someone about investing in mobile homes, they're going to put their nose up at you.
Yeah.
That's the truth, because it's not sexy. They haven't been taught about the available opportunities and the other institutions that are literally investing hundreds of millions of dollars into this asset class. It's a new election. And if you're sitting there thinking about the opportunity and the asset class of manufactured housing, now's the time, people. We're sitting here today, Dr. Ivan's doing stuff in, I think, Arkansas and Florida as well, seeing those markets blossom.
Yeah.
There's a nationwide opportunity here, and with not a lot of competition. There's not many people that are trying to procure this type of asset and ultimately offering a secure return.
Yeah, I think you mentioned, I think there's a little bit of a stigma that you've alluded to, like the trailer park boys. I would imagine that some of those developments that you're working on are pretty nice, pretty high end. Yeah.
So it's a new election, because historic in the 70s here in Arizona, they started building these parks, right? So they started developing mobile home parks. Well, the strategy was entirely different. It was mom and pop developers that developed these communities, where now 40 years later, BlackRock, Vanguard, Cobblestone, CalAm Properties, Equity Lifestyle Solutions, these are institutions that are now finding this asset class a 50 to 100-year market hedge for the long-term cash cow that they are, where before it was, again, mom and pop owners. Well, over 20 years, the housing's gotten so unaffordable. Now, where do these institutions hedge their bets? They're buying mobile home parks, increasing the quality in metropolitan areas with high population density and high rental rates. They see, their market analysts are running a financial model of what that looks like, what the stability is in that hedge of a 50 to 100-year return. And it's ultimately raising the quality, raising the election of a desirability in mobile homes. It was mom and pops before, now it's institutions, and that's not going to change.
That's great. Dr. Ivan, do you want to chip in here about any questions, or why don't you just explain what you're doing with mobile homes?
Well, we are basically doing the same thing that Alden and Silvercrest Opportunity Fund is doing, in the Arkansas market, and we're looking to expand into the Georgia and Florida market. Our wheelhouse is to provide affordable housing to those who have been priced out of the housing market. And it gives us a satisfaction to provide that service to individuals that previously didn't have that opportunity. And at the same time, we're providing investors with a stable income backed by a hard asset. And I'm looking forward to possibly one day develop a partnership with Silvercrest Opportunity Fund so that they can expand and we can expand our services nationwide.
I love that idea. Why? Because this is not going anywhere. Ultimately, what does it boil down to? It boils down to available capital.
Available, yes.
That's why we're here today. That's why we started this fund. It's a 506c3c1, and ultimately to garnish enough private capital to execute out in the market with qualified operators that know what they're doing nationwide, procuring an asset that is highly non-competitive. The returns are above average, and there's not going anywhere. The market is abundant in manufactured housing, and a lot of these homes are coming due. If these parks were built 30 years ago, these homes are now needing major rehab and to reestablish them to the new desirability of the market. So as I garnish private capital, at one point, Dr. Ivan, we're going to be having a serious conversation about what that looks like. And I know it's going to happen because our aggression in marketing, we're available to market our fund as an accredited investment fund. And I think that not only for the emotional satisfaction, the stability of the asset, the institutional investment strategy following in their coattails, and the nationwide need in high metropolitan areas, I think people may be watching here today, ultimately needing to make a decision and want that emotional satisfaction, want that return, want that stability. And as we see, there's plenty of deal flow. Where's the deal flow in residential real estate? Where's the deal flow in multifamily investment strategies? There's really not much. People are talking a lot that there's going to be some multifamily opportunity, but there hadn't been all that much hurt yet, I think, to get true deal flow. Well, on top of that, by the time you try and go invest in a multifamily, what is that acquisition? 5 million, 4 million, 3 million, 10 million for a institutional grade multifamily, or you're some deferred maintenance or whatever. Well, what a heavy lift, when over here on the side of manufactured housing, average purchase prices are anywhere from $50,000 to $150,000. For $5 million, we can get that many more doors opposed to a multifamily, in an off market or whatever. And on top of that, it's already cash flowing, consummated, and qualified. So not only do we not have to project a business plan for the deferred maintenance on a acquisition of a multifamily or a single family or whatever, we are already got a bow on it. It's already earning. It's table funded for the secure lien that provides. So Silvercrest will have first lien position, and it's already 30 days from that time. It's already cash flowing at pro forma cash flow. Where else can you find that deal flow? It's non-existent here in the nation.
That's fabulous.
So I'm looking forward to talk to Dr. Ivan further. We've talked multiple times, and it just hasn't been the right time yet, which is fine.
I think first quarter of next year, there are opportunities that are popping up that we may be able to collaborate.
Yes, and listen, with the high volatility in the stock market and the pressurized real estate pricing, there's investors looking for these opportunities. And me and Dr. Ivan and Greg and Silvercrest Opportunity Fund are here today to tell you this is the opportunity in the market, whether you like it or not. So, to earn a return in a non-sexy strategy, but still get the emotional satisfaction, there's real opportunity. Dr. Ivan's telling you today, first quarter of 2025, he's looking at opportunities the deal flow to make that happen. So I'm sitting here today to garnish capital from you accredited investors that may be watching here that want to earn a 10% return for a 1-year term or a 12% return for a 5. Those are net returns, people. That's not on top of a management fee. That's not a financial advisor's cut of your return that they're quoting. There's no maintenance, management, taxes, insurance. I could go on for another hour, I think.
And you have to add to the fact that these investments are senior moment here, retirement account eligible. So if you invest with a self-directed IRA in one of these funds, you're getting net profit. Okay, you're not getting asset under management fee. You're not getting a management fee. You're not getting a 12B1 fee. You're not getting an advertising fee. It's net. Which when you compare apples to apples, you compare the S&P 500, which supposedly has had an average return of 8%. But when you look at inflation and the adjusted that for inflation, the actual returns are around 5%, according to a couple of studies I have seen. I can't quote off the top of my head, but I can verify that. So again, if you invest in a tax advantage account, you'll have these fees net. And one of the good things is that with individual notes, if you have an individual note and the borrower pays you off early, your yield increases incrementally. I mean, it goes off the charts. I've seen yields go from 9.5% to 52% once someone pays me off early. So you cannot get that in a S&P 500 fund or a QQQ fund or ETF.
Dr. Ivan, the IRA custodians, who would you shout out right now? That's a great IRA custodian. If someone has $1 million, $2 million, $500,000 in their IRA, and they're trying to figure out what to do with those funds outside the stock market, who would you have to
recommend? Two companies, Directed IRA and Quest IRA. So those are the two companies that I work with. I have another company which I've been working with for a while, and I don't like the customer service. They're just too big for their britches. I'm sorry to say that. With Directed IRA and Quest IRA, you have someone dedicated to you. You can call that person up and say, I'm about to invest in XYZ, and they'll guide you through those steps. And I'm not getting paid to say this. So
that's good to know, to put that out there. He doesn't have a check slid under the door right there. The Directed IRA, I'm really close with them. Their customer service is next to none. Their education online is free. They do free education. They're at every national real estate event association. And Nate Hare is, I don't remember his position. I think it's like executive director or something like that at Directed IRA. We're doing a mobile home workshop on Tuesday, October 15th. I think it's at 11. So that will teach you how to invest your IRA in a stable asset with the IRA custodian. So tune into that on the 15th. Additionally, they're having their Alt Asset Summit here in Scottsdale. So if anyone has money in their IRA looking for ultimately opportunities out in the market, here in Scottsdale, they'll have the Alt Asset Summit. We'll have a booth, and Studio Captions and Advertising will actually be there. We'll be doing interviews and things of that nature. Additionally, you can come out and see the products, mobile homes, flips, maybe even catch a sale on the side, or, whatever you're looking for. So Directed IRA and Trust Company, we're on the Inc. 5000 top 5,000 companies growing in the nation. And Nate Hare's been on our podcast, and we're doing that workshop. So, man, Dr. Ivan, thanks for bringing that up. I always forget about the availability to direct an IRA in a secure, stable asset outside the stock market is next to none.
And also, Quest IRA offers traditional IRA, a Roth IRA, a SEP IRA, a simple IRA, an inherited IRA, checkbook control IRA, health savings account, Coverdell education accounts, the ESA, and they also have a lot of resources. They have a blog, they have video library, they have their own due diligence portal. They also have live webinars and local events, and they are even open to speaking at events where if they need someone, a subject matter expert, they will actually go and speak at those events. So these companies, again, are there for the customer. Again, I'm not getting paid to say this, because just that's my experience working with them. So
That's a great endorsement. Fabulous. So,
Yeah.
so I guess the thing is, investors have a lot of really good resources here. Both Dr. Ivan and Alden offer the investments with the Silvercrest Investment Fund and the Note Doctor also. So this is, I guess there's a lot of opportunity here, and the bonuses you guys are helping with the housing crisis.
yes. Okay, we also offer, again, notes backed by our hard asset. We're offering a rate at 14%. We have to keep up with the competition. He's not, we consider each other friends. So yeah, 100%. So again, I endorse Alden and Silvercrest Opportunity Fund. They've been a great resource for us, and I like the collaboration that we have been able to establish.
Yeah.
No, 100%. It's needed. It's needed right now. You know, there's a available open door of opportunity, and can't capitalize on this all on our own. At the end of the day, the pool's too big. There's too much available opportunity.
I think it's a blue ocean strategy. I think there's more than enough for everybody.
Yeah. More than enough for everyone.
Yes.
Okay. So I guess maybe we can call it a day. And so you guys have a lot of information. I'm going to transcribe this and probably post it and make it available later with the links to these various organizations. And Alden, if you could send me the link to the event you talked about coming up. So
yeah, investors need to get out and meet people at these associations. You guys were talking about it last week. I missed that. My apologies. But Diversified Mortgage Expo, the Note Expo, what great resources for a capital investor to go learn how to invest in notes. You got the Alt Asset Summit coming up in the next 2 weeks, I think it is. So, I encourage individuals, get out there, meet people. We'll be at those events as well. And, the available resources that are offered to you today are next to none. So Greg does a great job here at the Note Center. A lot of resource availability. So you do a great job, Greg.
Okay, thank you very much. No, it's good fun. These, as we were talking about with these events, is you get to meet people, you get to learn things, you have opportunities to make deals, and they can just be fun.
Yes.
So, yeah.
Yep.
So thank you for the both of you to come today and share these opportunities and solutions to the housing problems. So anyway,
I have to thank you, Greg. You are definitely the chief enabler in helping us come on to this program and offering up these opportunities.
Fabulous. Okay, well, I guess let everybody go and enjoy their Saturday and have fun.
Yep. I have to bring down some shutters because of Hurricane Milton. So.
Oh yeah. Well, okay.
Thanks, fellas.
Yes.
Okay.
All righty.